Welcome back to another video, and this is part 2 of how to assess the macroeconomic conditions of an area and do your deeper due diligence when investing into property. And in this video, I have 5 important metrics that I'm going to run you through, and I also have a bonus one for you at the very end. So make sure you watch through till the end of the video. But without further ado, let's get into the first metric. Now, the first metric that I want to talk to you about is exports versus imports and why that's so crucial for an area. And in the first video, I actually talk about economic output. We want to invest into areas with a good GRP. And the second part of this is to actually look at the exports of an area as well as the imports of an area. And I'll show you exactly how to do it. And the reason why exports and imports are so important is because it reveals the economic strength and the interconnectivity of an area. Exports are more important than imports because exports, from a purely economic standpoint, are more important for a trade surplus, which generally benefits an area because it indicates higher demand for its products and its services, which can impact domestic production, which will impact employment. And so we really want areas with good economic exports as well as imports. And so where exactly do you go for that? One of the resources that I use is Economy ID, which when you go to economic value and you click on exports in manufacturing, you can see they manufacture a lot of food processing as well as primary metal product manufacturing as well. And when you look at the mining, you can see a large part of it is coal mining as well as metal ore mining. And that's a simple way you can check the exports of an area. In a similar vein, when you go economic value, you can check the imports of an area in Townsville, for example, and in the same fashion, you can arrange this by what's the highest. You can see manufacturing is, as well as mining, transport, and professional services, and etc. That's a simple way you can check the exports and imports of an area. And the higher the exports, the better for an area. And to really stress this point, I want to shift my focus to an area like Mackay, which I did in a previous video, where you can see that 11.4 billion in 2023 was regional exports, and part of that 11.4 billion was that 6.9 billion came from mining. So say for example the mining industry took a hit in Mackay, then this could have a significant impact on the house prices of that area, whether it causes it to flatline for a significant amount of time or even decline for a little bit. So this is a risk that you must consider when investing into Mackay, for example, and it is why you do the deeper due diligence of exports and imports of an area. And don't worry, there's even more metrics that we have to go through. But before I get into that, if you have not already, make sure you join the private community. We have over 100 members within this community and it's growing so fast. And if you're looking to buy property in 2025, it is an absolute no-brainer to join. There is even a 30-day money-back guarantee. So if you don't find the resources useful, which I know you will, I'll give you money back. And there are so many reviews out there. You can read it. You can have a look at what resources are available. And if you have any questions, you can just leave it in the comments below. But let's get back into the video because I know that's what you're all here for. So then what is the next metric that I want to be looking at? And it's quite simple, and it's all about household income. And the reason I say household income is so important is because I'm going to show you something. When we look at a region like Armidale in WA, you can see that it's grown significantly over the past 3 years. And that means that affordability is short. You can see that affordability is sitting at 50 years. That means the area is no longer affordable for locals in the area. And that's a problem. We want to be investing to areas that have a good household income and that is also affordable for that area. And so then you may ask me, where exactly can I find household income information if you're not looking at the affordability index on HTAG? Well, I'll show you. Let's take Townsville, for example, once again. And you go to local workers and you can actually see the income broken up down by the ABS source here, which shows you the average individual income in 2021. Now, obviously, this is ABS data, which means that you can go to the Australian Bureau of Statistics website and also find that information. And what you want to be looking at is ABS Quick Stats. And if I type in Townsville, for example, and you look at statistical area level 4, you can see the average median monthly mortgage payments as well as the household income within that area. And you can even break it down further by looking at different areas and segments of it as well, like SA3 regions, which is a bit more niche down. And you can see that even further. What's another way we can look at it? You can use Picky.com, which is another very useful resource, which shows the average income growth over the past couple of years. And this is another resource that you can use to identify, is the income growing within that area? So there's a couple of different sites you can use, and with these sites as well, a lot of the data on the back end might be the same, and they use usually ABS census data because it's the easiest one to use. Oh, and one more thing, you can also do it on SQM Research, and you just find the postcode that you're looking for. You look at the graph and you can see weekly family income, and you can press that and you can see the income projected as well for 2026 and the census data of 2021 as well. And the reason I'm saying it's important to invest into areas with good income growth or a steady income is because that high income growth is often linked to job availability plus a better local economy. It also means that you can raise rents within an area without having to worry about a tenant leaving. Because if the person is not having a good income or they're under mortgage stress, then you're not going to find that you're able to raise rent, and that house prices will generally have a cap on it. So income growth is another metric that you want to do further due diligence on. But there's more metrics. And the next one is a very important one. And if you're wondering what that metric is, it's to do with schools, universities, hospitals, parks, amenities. Just before I go on to that metric, if you have not already, make sure you subscribe to my free newsletter. It's absolutely free. And I go in depth about each individual location every single week and give you great details and tips about whether or not you should be investing in that area. So make sure you go subscribe. It's free, right? It's a no-brainer. Go and subscribe, seriously. Now, when you're doing further due diligence into an area's amenities like schools, universities, its lifestyle scores, but one of the sites you can use is actually using property.com. And if you search up any property within that area that you're looking to buy in, and if you start to scroll down to the bottom, you can also see very useful metrics, which is nearby primary schools and nearby secondary schools. And there's actually a key word here that you need to take note of whenever investing in property. And that's the word of catchment. School catchment zones are very, very important when you invest into property because the location and the suburb that you choose, you want to be generally investing into suburbs and locations that have good schools. And you have to determine what school catchment zone they actually fall under. Because for owner occupiers who have children, that's a very, very important metric to factor into. And especially when you're considering buying into a capital city, not all suburbs are created equally. And one of the important factors that a lot of families consider is school catchment zones. However, when considering regional areas, you must consider schools, but you also must consider things like whether it has a hospital or whether it has universities, whether it has parks, amenities, shopping centers, malls. The truth is, no one wants to live in an area where there are no amenities, no shopping centers. That's not the place where people want to live. People want to live where there are amenities, where there are schools, where there are hospitals, where there's transport and infrastructure. That's where people live. So you need to consider that factor in. This is why areas like Mickleham really don't attract me as a place to invest apart from the other obvious factors of developable land supply and etc. Simply not having any infrastructure is a serious problem. All right, so far we have gone through 3 major metrics. Now there's 2 more and then a bonus one that I want to go through. As you can see on screen here, the next metric that I want to deep dive into is population growth. Now people have a lot of opinions about population growth, and I think population growth is an important metric to consider. Now it's not the be all end all. However, it's a factor that you must consider when investing into property. The worst case scenario is that you do not want to be investing into an area that has a declining population, because that could mean that there is less demand for properties in that area, causing properties to either flatline or to stop growing. We want to invest into areas that have somewhat of decent population growth because it could lead to increased pressure on housing as well as leading to price appreciation and stronger rental demand. And population growth usually happens on the back of job opportunities, lifestyle appeal, and infrastructure development. So it's really important to consider those factors. And you can find population growth on either SQM Research, when you look through here, you can find annualized population change, which this is Sydney. And you can also have a look at Townsville, where if you go to economic ID, you can see the population summary, as well as population estimates. And you can also see by year how much they grow by. You can see Townsville is growing about 1% or 0.5% every single year. We want to see decent population growth. Now, there is a counter argument, and that is that if building approvals outperforms or outsupplies the number of people coming into the area, then it will still cause house prices to stagnate or flatline. However, if more people come into the area and there is less supply available, this will cause house prices to go up. It's basic supply and demand and comes back to that factor. So even though population growth isn't a leading factor, it's definitely a factor that you must consider when investing in property. And case point example is that Melton has 4,000 building approvals, but Melton also has a significant amount of population growth that is coming into the area, which is why some property experts believe, despite all the building approvals within Melton, because there is so much significant expected population growth, it will still cause house prices to increase. Now, I've made my thoughts about Melton pretty clear. Go check out that video here and I'll go further into detail there. But what is the last metric that I want to talk about? And that is good old flight zones and traffic noises. And this one I'm going to really touch on very quickly. Simply put it, we really want to avoid buying into areas where there is high aircraft noise. And the reason is because it's generally less desirable for owner occupiers of an area, as well as for tenants. So it could be more difficult finding a tenant, as well as harder to sell the property down the line. And it doesn't just extend to flight path noises. That is definitely one factor you must consider. But another major consideration that I want to point out is that when you look at areas in Cairns or Townsville, for example, you can see that a really major highway runs throughout the middle of Cairns called Bruce Highway. Now, this is going to have a significant amount of traffic noise. So all these houses on this part of Cairns is going to have or be less desirable for both tenants and owner occupiers. So that is another factor that you must consider, both flight paths and traffic noises. Now, that being said, if you're trying to buy a house over here and you can see that there is a highway very close by and you're trying to wonder, okay, is there traffic noise or not? You can either look at planning websites online, or you can call your local property manager and ask them, hey, how is the traffic noise? Is it loud? You need to confirm with them. And if you're not convinced by the first property manager, call another one. Do your due diligence. And I've got one more thing for you, and that's about crime rates. This is the bonus bit. And I want to say that this metric is a metric that you don't need to consider, or that you should put very less importance when you're considering capital growth. And the reason I say it is that because places that are known to have very high crime rates or lower socioeconomic areas have significantly grown in capital over the past 3 to 5 years. And the place I'm talking about is Townsville, for example. You can see that Townsville, like I've made my point, is very clear that over the past 3 years, it's grown significantly. Yet, the crime rate over the past 5 years has significantly increased in Townsville. If anything, more crime equals capital growth. Now, obviously, that's a joke. But this trend should show you that just because a place has high crime rate, that doesn't necessarily mean that capital growth won't occur. Another case example is Armadale, which has also grown significantly over the past 3 years, but is a lower socioeconomic area, as you can see by the IRSAD score there. And if you were to look at that on the crime suburbs report as well, Armadale you can see that also crime has been increasing over the past 3 years, which once again, despite the higher crime, it's also grown significantly in value. So, what should you be considering when you're investing into higher crime rate areas or lower socioeconomic areas? You should be really picky about the street that you buy in, as well as the tenant that you put in the property. Now, obviously, we still want to be avoiding any public housing areas, any commission areas, any cluster of them. However, you need to be really choosy about which tenant you put in that property. Now, I hope all these metrics have helped you when you are investing into property. And if you are looking to learn more, communicate, and be part of a wider property community and just have that support, make sure you join my private community. And if you're wondering exactly what those first few macroeconomic factors that you should be considering are, then you definitely need to check out this video here.